Hello, this is your end of week wrap covering the bigger economic view and the most trending topics of the week. The International Monetary Fund has again cut its global growth estimates for 2019, this time to 3.3% from 3.5%. The IMF says economic growth is at a risk from intensifying trade conflict and likely tightening of monetary policy by the Federal Reserve. Compared to a year ago, where economic activity was accelerating in almost all regions of the world. The likely cause has been the escalation of US and China trade tensions, the credit tightening in China, macroeconomic stress in Argentina and Turkey, and the normalization of monetary policy in the larger advanced economies. We are expecting the growth to pick up in the second half in 2019, supported by significant monetary policy accommodation by major economies. The US Federal Reserve, the European Central Bank, the Bank of Japan, and the Bank of England have all shifted towards a more accommodative stance. Also, the outlook for US and China trade tensions has continued to improve. The recent global rally from the steep correction at the beginning of the year is starting to take form at key resistance levels. The German DAX has been the laggard during the recovery. If we see breakouts of these key resistance levels along with positive earning releases from corporates, this would be extremely positive message towards the global stocks. It seems nothing can stop the oil bull market as tight supply continues to drive prices higher towards crude's longest weekly winning streak since August 2016. Crude oil prices have rallied by 40% since the start of 2019 as OPEC's supply curbing efforts and sanctions are placed on Venezuela and Iran. This week's tensions in Libya only help the oil market further. Going forward, global growth concerns and the soft stance from OPEC members may put a dampener on the bull run. 7 CEOs of institutional banks had testified this week, a one of its kind since the financial crisis in 2009. Lawmakers grilled the CEOs on a variety of topics, including overdraft fees and Trump's effort to roll back industry regulation. The earning release will be a marker for the global financial sector as investors will scan the report for any hints of a recession as the earnings season kicks off. The crypto markets have followed Bitcoin's lead and spiraled downwards. The recent drop after Bitcoin had surged to highs of $5,400, at which point cryptocurrency faced a large amount of selling pressure where the price had reached a significant support level. Uber has been the headline talking point this week as they open their books to head towards public listing. They have revealed a $3 billion operating loss last year, whereas Uber Eats has grown 149% year on year as they aim to achieve a market value of $120 billion. Also in the prior week, the minutes from the most recent Federal Reserve meeting had implied that rates in the US could hit their peak and there will be no more increases in the current year. From the European Central Bank, Mario Draghi had warned of a slower growth momentum in the Eurozone. PMA was able to secure an extension to her withdrawal agreement until the 31st of October. So the outcome still remains unclear in regards to Brexit as cross-party negotiations are at deadlock, and that will continue into the new week. Thank you for listening and have a great weekend.